The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, Basil, Chapman here. Tommy is out and I'm sitting in for this hour. And I'm sorry I can't give you the fundamental analysis as Tommy always does so articulately with the latest economic report, although I think the housing market was a little softer than was expected, and that's important. So what we've got is the Dow futures are down 89. I'll go to the cash index right now just to show you that there were three candles that I like to look at just in terms of, let me just get there. I like to look at in terms of what the candles are telling me. That's all. It's as simple as that. And there were basically three Mariposa candles. A Mariposa candle, the way I've always interpreted it, is a candle with no wicks. As someone in the den said, a bald candle. However, it's really, a candle means nothing. It's what happens after the candle. That confirms that the characteristic of whatever that particular candle is that you're looking at. I've seen that when there are three big candles, they're usually very big green or big reds, and they have basically no wick or a very tiny wick. What happens is after the third one, and yesterday was the third one, there is either if there is a gap up immediately, that can be an even more powerful move to the upside. But if there is some weakness early on, and that would say to me that either there's a little doji candle, that's a sort of plus sign candle, small candle, opens and closes at about the same price. And the following session after that is a weak session, or immediately there's a weak session, so that the high of this particular candle, in this case, I'm going to the Dow Cash. That's from yesterday. The high was 40,590.51. The price pulls back and doesn't make a new high, a new recovery high, and that becomes a peak. Whatever that peak is, in this case, it would be a peak B. But you see this dashed line here? It's called the Chapman Wave Inside Wedge Target Repellent Line. Dash green on the way up, dash pink on the way down. What we're looking at here is it hit exactly. So that is resistance. So what we're looking at in the cash is that there's this Chapman Wave Inside Track repellent zone, the green trend line declining from highs. And then within like a 16th or just a little more than a 16th, I always put in a channel, a trend line, so it makes a little mini channel. And then I call the Inside Track repellent zone. So this is the daily chart. Now let's go to the cash, go to the futures, and the futures are saying, hey, wait a minute, ours is just slightly different. We've already gone right into the resistance level, and it doesn't quite coincide with the Chapman Inside Track, Inside Wedge repellent zone, but all of this coincides to say, hey, there should be some kind of pullback here. How long it lasts is going to be very important. So I wanted to articulate that, although it's Technical Friday. I usually do it on my show. I wanted to bring it now because I had a couple of questions about it, and I wanted to get it right away. So, but look at the monthly chart, very choppy, but basically sideways. You can actually see it in the Dow a little bit, the Dow Cash a little bit better than in the futures, the YM trade. So this is the cash, and you can see we made this double cup. That's like a U going to a double U formation. Now we're into the third U, and that's just suggesting that if at any point in August, and we're halfway through the month exactly, there is a close into this candle here. That's about the 40,954. Let's call it in the 40,950s, then there's a really good chance we're going to go to the previous highs. And the all-time high was 41,376.00, a round number all-time high. That's amazing to get a round number like that. I used to, years ago when I used to hand chart, I'm talking about years ago, this is before computers, I did the Dow chart and I got the history, and I did the Dow on engineering paper, graph paper, and I went back to the 1920, I think it was. That's where I had data. And basically what we were looking at is every time I saw a close that was just fractionally and almost an unchanged level, I'd make a little yellow, took my yellow felt pen and I'd make a little yellow mark. And over the years, I've learned just exactly what round numbers and 0% changes mean. And here's this round number. We went from 41,376 down to 38,499. So this is a pretty decent move on the upside. So I just need to clarify in the Chapman Wave methodology, we've gone to a buy signal. I haven't yet updated to a buy mode. The moment it goes to a buy mode, because the stochastic's running very strongly and it's only at 47% right now, that implies that there should be at least 4 higher peaks from the low. And that goes peak A is the first, peak B is the second, peak C is the third, peak D. And then I think we need to be careful. So I'm anticipating that this is a very select rally. And we've rotated. People are wondering why, with bad news here and bad news there, what's going on? Well, we've rotated. We've gone into other areas. And those other areas are places that were very weak earlier on. All right, so let's just go back to the story. We've got the Dow INDU trading right now. That's the futures down minus 92 at 40,591 off the 400-point rally. You can expect some kind of a digestive phase. It might last a day, might last 2 days. If it does last at all, we never know. The day is very young. Let's go to the E-mini. The E-mini is trading right now down 23 at 55.44, but it had a spectacular move. I just have to go through this. I can't believe it. Did I not see a peak? 5-1, 535.925, 5361. This is a gray leg. It's still a gray leg A. Gosh. Oh, the stochastic is 76. If this is an official leg A instead of what I call a gray leg A, meaning I haven't got all the technicals in place to give it an up arrow and to go to a buy signal and then upgrade to a buy mode. Wow. All I can say is we should still get to a B and then a C and a D, and that should take us all of August. All right, so that's the story there. So this is very good action. Let me just draw this as the Chapman Wave falling axe formation. It's a declining cone, expanding cone, going down, then it breaks to the upside, and then your targets are on the left. Right here's what the target on the upside is 5,600.75. That's our first target. Today's high intraday is so far 5583.25. Let's go to the QQQ. Let's go to the NQ. This is same thing, a leg A. Wow, this is very interesting because if the stochastic at any point in the next week, it's at 77%. If it goes to 80%, I think we're going to go to higher highs, peak A, and then a B, and then a C and a D, and we haven't even made a peak A yet. I'll be right back. Basil Chapman sitting for Tommy O'Brien, and the S&P, the NASDAQ is down 91 at 19,490. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Hi, folks. We're back, and Basil Chapman sitting in for Tommy O'Brien. Morning Market Kickoff time. We're looking at the NQ, which is now down 80 at 19,500. This is still a leg A. We cannot make a peak A until Monday. Why? Because there's a new recovery high right here at 19,683. And this is going to be very interesting. I can see buyers lurking all the time. And what I'd say to subscribers to my opening call, since we had yesterday we had almost a full house. Just about every stock, every position that we had was up, some were up huge. And whenever that happens, I always say, hey, just expect the next day is not going to be like this at all. Keep your hands on the wheel. Don't pat yourself on the back, because when you take your hands off the wheel to pat yourself on the back, that's when you hit the tree. And at this particular point, it'll be a wonderful surprise to see if the Dow can go positive at all in the next 2 hours. I would say it was 9:30. Yeah, by about 11:30. If the Dow just manages to squeak to a positive after all this, that is just telling you that the buying intensity is still there. And that's one of the reasons is that we went in the VIX, if I'm typing in the right place, yep, VIX.X, there we go. VIX index had a move on the 5th of August to 65.75. That's carry trade, Japan, nervousness here, the works. It was so quick to go. This is called an inverted Chapman wave Roman candle. If there was a move at any point after that, within 2 sessions, into the 48.27 area after the close that day, which was at about 38, that would have said, wow, we're going all the way back. But to close 2 out of 3 sessions after that, underneath the low of that session, said, uh-oh, be careful. But now we're sitting on the 200-period exponential moving average at 15.61. It's starting to get to an area that says, well, we could have a little bit of a pop-up, but the momentum usurping all that fear going into that high of 65.75 just tells you that the speed with which this all happened is really saying to me that a lot of people missed out on August the 5th starting to put in buys and to garner some kind of upward leverage by being in the trade as it quickly moves up. And then it gets to the shaky period, which is where we are right now, where you can start to see a lot of volatility, even though there's still an upward trajectory, but you at least can put a stop in that gives you a good cushion, which is what we've attempted to do. And that just says to me, this is just one metric, an extremely overbought fear metric. And now we're seeing the residual effect that's taken about almost 2 weeks. And here we are on the 16th of August, looking at the VIX index up 38 cents at 15.61, but basically saying, hey, I had a spectacular move to the upside. I just need a bit of a rest. Okay, now let's go back to our story. We want to look at gold. Gold is up 33. It broke out of this cup formation. And one of the reasons why we've got a gold stock is that it looked to me as if this high-level consolidation this is a continuous contract. So this means that it gets smoothed out, and therefore I have to put my notations. It isn't automated. Every single notation you ever see with a lettering is mine or the cup or the trend lines. So that says if there is a push by next week above, it doesn't have to close, above 2535.3. That was the high of the week of the 19th. I have to consider that that's probably peak A, peak B, and it's a brand new leg C to the upside in the weekly chart, and it extends the monthly chart leg C at highs, and that's really important. So within that context, gold is acting, the day's young. I'd like to see it close above this trend line. Remember what I was saying? When you break the inside track repellent zone, you always look to the left side high, and you keep looking to each high. We've gone above the high, the most recent all-time high, which is on the 17th of July, 2335.3. We've already gone to 2531.6. So there's a chance we can go above it, but we haven't. But that would be the target. Silver was looking horrible. And then I better drink something. Hold on, a little tea. There you are. That is leg A to the upside. I just wanted to check. I did already yesterday. I'll do it again. 28, 105, 28, 135. Okay, yeah. So this is gray leg A. Make it gray. It just means that I haven't got any confirmation of a buy signal or anything like that just yet. So there's no up arrow, and it is a nice arch cup formation right here. Let me just draw that in. And that just says that the metals are in play. Silver's playing catch up to the gold. At one point, when it was right there, it was acting much better than the price of gold. Then it made a one-to-one more than a one-to-one to the downside, going to the 26s. And here it is at 28.35, down 0.08, but at least it's trying to rally. Let's go to the high-grade copper. High-grade copper is down 0.05 at 4.10. This is leg B in the Chapman wave, but it's not a very good pattern at all. But here's the good thing. It is hugging the weekly 200-period moving average. Is trying to bounce off it, and that is a 3.98. So that is a good sign. This is a gray A in the weekly chart. Very, very weak action. There's nothing to see here, folks. It's an attempt to move. The fact that copper is moving down, has moved down so sharply from that double top leg D, that went to a peak D up in the 5, I think it was 530 area. And here we are at 4.10. 4.20 is the 200-period exponential moving average daily chart target on the upside. Every time it's got there, it's been repelled. Let's see what happens if it can get there again next week. Now we're looking at, I wanted to look at, the dollar, DXY, being very weak. Now it's just in the sideways move in the 103 area, 102.71. The 103.01 area is the 200, is the pink 9-period exponential moving average, which is still very, very negative. And what we're looking at here is that the weekly chart is arched over and is taken out, but is now above the left side low that is important, and that is the low of the week of the 8th of March at 102.36. So it's not going anywhere. But look at the euro, EUR, USD. As we go to the break, the euro is up. It's at 1.09. I'll be right back.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Hi, folks. We're back. Markets opened, and the Dow is down at 32. The S&P is down 14, and we had a sudden spike in the E-mini. I'll go to it in a moment, but I had a question. Kevin said, the SLV monthly chart is still good. I should have done that. I was talking about the S&P earlier on. This is Basil Chapman sitting in for Tommy's show hour. And yes, that monthly chart is at a peak D. The 9 is over the 14. The MACD is good. Stochastic is at 72%. I prefer to see 80%, but it is rising. So yes, it is acting pretty well. and the SLV has gone to a leg B. In the daily, the weekly has gone to a peak E and then pulled back. The 9 is almost close to turning down, but it hasn't yet. It is, in fact, acting very nicely still. So we'll see what happens there. So you're correct, absolutely. The monthly chart is still doing very well, although after a peak D, you usually anticipate a pullback. If it's a cup formation, it'll go underneath the left side high, which is at 27.98. That was peak B back in, I think, January or February of 2021. So let's see what happens next. All right, so yeah, good point. Thank you for bringing it out. And in fact, for the very first time, I can actually say there's a mini cup formation trying to form in silver. That's the SLV. That's the iShares Silver Trust. And the big thing will be in the next, I don't want to say week, I prefer to say 3 to 5 sessions. It will be a week, but I'd like to see at least a tackle of the high that was made on the 1st of August of 26.56. It doesn't have to close there, but I'd like to see it go above that. All right, so, and a question, thank you, in the den, we've got Gator who said, seasonal daily history, this day has been bullish over 60% of the time, buying at the open and selling at the close. Ooh, I hope you're correct. I need to just do a couple. I'll do more in my show, the Tiger Technicians Hour, because it's what I call Technical Friday. But I just wanted to show you what I drawn in the 1 minute chart and the E-mini. This is the E-mini S&P. So I pointed out that it made this peak E that was made in Chapman wave methodology. This was the high that was made at about 3 o'clock this morning early. And then what happened is it pulled back and the 9-period moving average turned pink and it went all the way. Where did it go to? To the 200-period moving average of 5543. Then what happened is it went a little bit lower, went to 5536. And now that 200-period moving average, as we saw yesterday that I was pointing out, has the potential to be a springboard. And I said to subscribers, we aren't adding any new positions today because after those 3 big candles that we had, those Mariposa candles in the Dow, you'd expect some kind of a digestive phase. So we'll see what happens there. But if the 5-minute E-mini can turn green, the 9-period moving average can turn green, it's having a tough time trying to do that, then there's a chance that the 200-period moving average of 55.61 can be tagged. It's a big ask because we've had a lot of movement in the last, I'd even say in the last hour in the market. So it's still what I call a potential digestive session, but this has gone to the 1 minute 200-period moving average, and now it's stalling at a D. I'm calling this an peak C1, C2. I don't want to go into it now. Maybe I'll do that in my show, Technical Friday. Let's call this a D and an E, and let's see how it can hug this line of 55.54. I think it's going to pull back a little bit, and then if it can climb into the 55.57 area, 55.58, wow, then we can start looking at the 55.61. So it's a whole process. Right now, it'll go through this digestive, and the bulls and bears are fighting it out, and we'll see who's going to win in the next, I'd say, 10 minutes or so, 10, 15 minutes. All right, so that's enough with that. Let's go to the charts that we were looking at. And is this the second big attempt to get there? Yeah, we'll see. So I got through the silver. Now, what I want you to do is to say, look, gold, GDX, that's the gold miners. Gold miners was holding quite nicely. It's gone to a leg C. That's very important in the daily chart because the 9-period moving average has finally turned positive. If you're looking at the stochastic, it's only at 77%. It needs to get to 88%. The MACD is good. Look, the gray relative strength this is the daily chart. The weekly chart had, and I was joking about it, it's called a diamond pattern. And I always say, oh, the diamond pattern, because years ago, I can't remember who it was. It was someone in the den who said, oh, my OMG, the diamond pattern. Well, the implication was it was like the Hindenburg, right? There's another pattern that has a wonderful history of failing. But most importantly is that just as we're doing this, I'm going to go through a buy mode in the GDX. That's implying that it should go to at least the leg D. Okay, so what we're looking at is this diamond. Just the pattern looks like a diamond. the reason why I make a joke about it is there are other patterns that supersede this. And very often what happens with the diamond pattern is that the trend line, the downtrend line that makes the right side of the upper declining trend line that creates the diamond gets broken to the upside. And then what you have to do is you have to take it away. Well, the day is young, but the week is young. There's a weekly chart. I'm just going to take it away and say, look, there are other patterns here. And the pattern that's really formidable at this particular point is that there was a mini Chapman wave falling axe formation right here. If I take just the highs and I do this, and then I take the lows and I do that, that's called a Chapman wave falling axe formation. And it says if there's a break to the upside, look at the left side highs, because that's what you will tackle. And it's the same thing here in the daily. Look what we're doing. We're tackling right now in the GDX 37.98. You're tackling the left side high of the 1st of August, which is at 38.21. So we've still got another 22 cents to go to break above it. But that's the kind of pattern that I like to look at. So, I said before that, yes, it's a pattern I look at, but invariably there are other patterns that supersede this. In fact, I want to get rid of that because none of this is meaningful anymore. You had a cup formation, you broke to the upside, now you've come back, and we'll see if GDX is able to sustain the move, and that's going to be very important. So a couple of questions that I want to see come up here. Fletch says gold to 3,200. Not today, obviously, but sooner rather than later. Now, with the Middle East going on, we have to talk. We have no choice but to talk politically. And that just says that there is just no way that there's a resolution. And no matter what's coming up in the next week in terms of sitting down and bargaining, because you haven't even got the players right there. Certainly haven't got at least one of the players has just said we're not going. So as I see it, gold is in play. And it's in play for two reasons. It's in play because the dollar has been pulling back. So just that mirror image of gold moving up when dollar moves down, it's come back again. There was a period where they were going in the same direction. Now it's back again. And dollar's weak, gold goes up. So I'm saying that that's one of the things. But the other is the tension in the Middle East is not going to subside very quickly. And I think gold has always been the go-to place, especially in the Middle East, but around the world, when it's the currency of fear. That's what I like to look at gold. Gold is the currency of fear. We've got that in the market. So now we've got a break coming up. The Dow is down 41, S&P is down 11. And let's see, there's resistance at 55.56 in the E-mini. Let's see where we are right now. Hugging the 200-period moving average for.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back, and I just wanted to go through a couple of things here. I know Tommy doesn't usually do this, but I'm doing it right now because it's live so that people can see how this works in real time. This is the E-mini. It could fail at any point because this is so far a single leg A up in the 10-minute chart, but it wasn't a single spike. It's been a number of bars. And there was this cup formation that I drew in. And when the 9-period moving average went green, that was the time to enter the position, actually just a tad lower there. And using the green line, so far this has been working beautifully to move away from the 200-period moving average after that 10-minute consolidation. That says it could keep moving down here to the 55, 54 level. That should be support. We'll see. We don't know. There's nothing to tell. But what I did want to say, this is Technical Friday for my show, but I'm going to do it now because it's pertinent at this particular time. In the 5-minute chart, in the futures, when I get 2 parallel highs, because you're moving in quarter-point increments, I tend to use that as a phantom peak so that I get to peak D's, the objective in the Chapman wave buy signal, upgraded to a buy mode when the stochastic's over 80%. It's at 82%. And that just says to me that that target right here, 55.61, the 200-period moving average, you can't think about it yet. I have to consider that this is a peak C. Actually, it's really a B, but I've used the phantom peak because I want to get to the D and say, hey, if I'm thinking it's a C and it then fails and I'm waiting for a D, I can lose a ton. But if it's a C, what I do is I can raise the stop, I can start preparing for it, and we'll see what happens. But in the meantime, in the daily chart, in the 1-minute chart, I'm calling this an F right now, and we'll see if this 200-period moving average does become support. We'll see. It's a work in progress. Okay, what I need to do now is I wanted to go, this is the GDX in leg C. I also wanted to cover a bunch of things that I had questions about. Let me just look over here. Basil, AEM, can we make a case? It hits its 9/2020, that's September 2020, low volume high of 89.23 unimpeded. Okay, let me get there right now. This is AEM. Move over, there we go. So AEM. We've got this, yeah, so this is, I'm calling this a brand new buy mode. Peak A. AEM is the symbol. This is Agrico Eagle Mines. I've got this as a peak right here. Yeah, so that's a peak E, pulls back. This is a leg A. Leg B goes to peak B, leg C. Here's this. Am I going to draw this diamond pattern again? No, it's just an expanding wedge for now. It's in the resistance area at 79.29 of 1.21. The question is, can it go to its high of 89.23. Let me do this. I like to go one step at a time. And all I can say is that let's go monthly first, because that's really the one that's going to tell you what's going on. Yeah. Sorry, I'm doing two things at once here. Okay, this is leg C in the weekly chart. So let's go to the monthly chart, and that is a leg D. I do not like failures of leg D underneath the previous high. That always makes me very nervous, because it says, I could take a timeout in time, maybe not so much in price. But the MACD, look, the 9-period moving average is way over the 14. The price is way over the 9. The Chapman wave inside wedge dash green target repellent line is at, I think it's 82 or something like that. If it's this month, it's 80. You call it 82, and we're at 79.29. Next month is slightly higher because it's a very sharp a diagonal moving upside target. And what I'm looking at here is the MACD is good. Stochastics at 88%, that's fabulous. On balance, the volume is good, a tad overboard. The weekly chart, everything's exactly the same. Stochastics at 80%. I like this very much. I think the first target would be 81. If at any point on a weekly basis it closes into halfway of this wick right here, that would be 82.45, then there's a really good chance that by September, could be October, we're going towards the all-time high. So absolutely. Now, I have to look at the downside. The downside says very short-term 79 to 78 is very important moving average support. However, if at any point in the next 3 weeks, it can happen, all of a sudden, let's say there's big peace talks for the Middle East, they could do it. And what I'm saying is hardly likely, but it could do it. Look what happens. Under the 5th of August, the low of 69, if there is a close below 68, that takes a timeout. And that timeout could stretch the whole thing. So keep it in mind, very important to hold between a shorter term 74 to 73 would be a worst case basis. Then I say, hey, the timeout's going to be longer, but being in a leg C in the weekly chart, it should still go to at least a leg D. So I like it. And the answer is yes. Timing wise, I really need to see where the candle closes for the month of August, but so far it's doing really nicely. As a candle, if it closed right now, I'd call this a chance of a Chapman wave Roman candle, and would say if there was a weekly close below 74.70, be careful, because it could touch 70 very quickly. All right, I hope that helps you. Question about HMY. Wow, what is this, the gold hour? This is Tom O'Brien's gold hour. We've got leg A, leg B. This is peak A, peak B. So this is what's happening to the voice? It's got to last another hour and a half. Peak A, peak A, peak B, peak leg C. Yeah, leg C. Harmony Gold, South African gold miner. Peak E in the monthly. No, leg E in the monthly. You have to wait for the whole month to see if it doesn't go above 11.02, I think it is. Weekly chart is a big move up. That is a peak D. These are moves to the upside. Using the same technique, if there is a close this week above 10.30, and we're at 10.32 right now, it says there's a real good chance that this move is going to take it to the high of the week of the 19th of July of 11.04, or maybe higher. But most importantly, over the next week, 9.83 to 9.50 is your key support level. And there is a cup formation. I'm not going to do that right now. But yes, it's looking very good. Next question. So in the Tiger, that was Tiger YouTube. In the Tiger Den, I had a question. I missed it somewhere earlier on. I think it was here. Okay, I can't see it right now. But I think it was a question. Oh, the TLT. I haven't got there yet. Still doing all the indices. The TLT had a horrible move Thursday. That's the bonds. having a fabulous move up 23 cents today, 97.33. I think it's stuck in a range. I think the yields are moving down in a kind of a jagged way, and that's what we'll see. Let's just see if the E-mini has done what we were looking for. Yes, there it is. So this is now, I'm calling this unofficially a leg D, right at the exact point.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, we're back. Basil Chapman. This is a morning market kickoff hour, Tommy O'Brien's hour. I have the Tiger Technicians hour. It's coming up in a few minutes. Remember, we were looking at the target of 55.61 in the E-mini. It went right there. It actually went just a fraction above it. Now it's pulling back. That's what you expect. And I'll talk about this when I come back from my show. Do I call this a D or do I call it the real thing, which is a C? We'll talk about that. We'll know exactly in a little while. Meantime, back at the ranch, I was talking about the TLT. I wanted to show you the crude oil. Crude oil is trading down 240 at 75.76. So this is a contradiction. Yeah, with the Middle East, you'd think that with the Middle East, all that's going on there, and then peace talks, etc. Yeah, maybe that's a good sign. But then why is gold moving up? Well, look, so crude oil gets pulled back from the resistance level, and gold is it still moving higher? Yeah, 43. What a fabulous move. Yeah. So this is just saying to you that the Middle East, so 2538.7. So that is that a yes. So that's now above the left side high that we were looking at, and that was 2535.3. And now I've got this as possibly a brand new leg B in the gold. And the weekly chart, I'd said this is now going to probably be a leg C to the upside. Wow. All right, well, we'll see what happens next. Meantime, back at the ranch, we're going to go to the next hour, which will be Technical Friday, where I'll go through some of the Chapman Wave methodology in greater detail. But let me just say for the record right now, that if the Dow was to go positive at all, let me go through this cash right here. After the three doji type, three Mariposa candles that we had going into yesterday's high, remember what I said? Normally what I'd be looking for, if there isn't a gap up, which will make for a really stronger fourth candle, normally I'm looking at a potential doji candle. That's a small little plus sign candle with a slightly higher high, or an immediate pullback. So this is saying that buying keeps coming in, and you can see that in the E-mini. We'll follow this because we've got a live performance right now, because we've got that trigger, that buy signal way down at about the 50, I think it was 55.42 level, and here we are at 55.60. Will this last? It's at the 200 period moving average. We'll talk more about it. Check